Good morning, everyone. This is Philly Financial Coach, and I'm coming to you today with another financial education video. Now, previously, I did a video showing you guys how to fill out the life insurance needs analysis form, and then I followed up with another video showing you guys how the theory of decreasing responsibility works, as well as the difference between cash value life insurance and term life insurance. So today what I'm going to do is tie all of that in together and show you how we use the life insurance needs analysis form to come up with a life insurance quote for our clients, okay? So the example that I'm going to use today is someone that I sat with not that long ago. Okay, this was a young man. He's a single father. I'm just going to call him Mark. He's a single father of his daughter is 5 years old, okay? So he does not have a mortgage, which is the reason why we left this blank. So he doesn't have a mortgage. The credit card debt that he has is $1,500. He owes $9,500 on his car loans, $17,000 on his student loans, and the cost of final expense is $15,000. So the sum of his debt obligations is $43,000, which is not bad. Definitely not bad. Okay, so he's doing pretty okay right now as a single father. His income is 65,000. If 75% were to go to his daughter, that would be 48,750. And what we're going to do, since he's fairly young, and where his income is, we're instead of doing the calculation where we get his daughter to the age of 22, we're going to do the times 10 rule. Okay, and then when his financial situation is a little bit better and he decides that he wants to revisit and possibly increase his coverage, then he's more than welcome to do that. Okay, so right now the income amount that is needed to be replaced is 487,500. Now when we go over to the available assets, he has 12,000 in savings, but he has no investments, no retirement assets, no existing life insurance outside of his employer, and he has no other income coming in. So the sum of his available assets will be 12,000. So what we do to figure out what his insurance gap is we take the sum of the debt obligations, 43,000, and we add it to the income replacement, 487,500, and then we subtract the 12,000 from it. So the current insurance gap that he has is $518,500. Okay. Now, what I would recommend for him is $550,000 in life insurance coverage. So now we're going to do a quote for him to see how much that coverage is going to cost. So this is for someone that is living in Pennsylvania. Okay, and he is a non-tobacco user. He is a man, but he is 26 years old. So let's change that. All right. And then we're going to go down and we're going to set it to precision term, because since he's getting coverage over 300,000, it will take him out of that other category, and he will have to provide blood and urine just to make sure that he is not a liability, and he's healthy enough to get the coverage that he is applying for. So since he's 26 years old, the goal is to get him as close to retirement as possible. So the highest tier that we have is a 35-year level term. All right, and that will get him to the age of 61. All right. So now the gap that he had was $518,500, and what we're going to do is we're going to recommend $550,000 in coverage. Okay, and let's see how much that is going to cost. Okay, so now we're going to come over to the quick quote, and we're going to take the information from his life insurance needs analysis form, and we're going to put it into the quick quote to see how much the coverage is going to cost him. All right, so this is for somebody that is residing in Pennsylvania, and he is a non-tobacco user, so we're going to check no for that. He is a male. He is 26 years old. Okay. And then we're going to slide down here, and since the coverage is over 300,000, we're going to put him at precision term. When you elect to have coverage over 300,000, it puts you in a different tier, and you also have to get blood and urine done just to make sure that you fit the criteria for that coverage. So we want to make sure that we get him as close to 65 as possible. We're going to put him at our highest tier, our highest term tier, which is 35 years. and we're going to put him at $550,000 since his insurance gap was $518,500. So far his coverage is going to cost him $81.96. So we're not done yet. Now we are going to give them waiver of premium, and basically what that is that it protects someone who becomes temporarily disabled. 6 months of the premiums are refunded back to you so that you can continue paying your premiums and you do not lose your coverage. Okay. So that is going to tack on an additional $6 and some change. Still not bad for $500,000 of life insurance. So as I mentioned, he does have a child, a 5-year-old daughter. And like I said in my video previously, the cash value life insurance versus term life insurance. Bad things unfortunately do happen to children, so they need to be covered as well. So what we like to do is we like to make sure that we give a little bit more coverage than just the average cost of a funeral, $15,000, because it's kind of hard to have, a child pass away on a Monday, the funeral is on a Saturday, and then you go right back to work Tuesday because you still got to make money to pay the bills, and life goes on. We want to make sure that the parents are able to grieve without the stress of having to hurry up and go back to work so that they can continue making the money to pay the bills, that it gives them that little bit of cushion so they can take, some additional time to grieve if need be. So that tax on an $11.34, still getting over over $500,000 of life insurance coverage for just under $100. The cool thing about the Child Rider program is that even though he only has one child right now, he's young, he's 26 years old. If he decides that he wants to have some more children, those children will be covered for free. He will still only pay $11.34. When you get life insurance, when you get this plan, you only pay for one child. If you have 5 children, you pay for the first child, and all other children are covered under that amount. All right, so that's a good plan to have. Policies cover all eligible children with one rider that is added to the policy, and the owner of the policy is only charged one fee, which saves them money. The maximum coverage on a child rider is $50,000, and it can be used for children age 5 days up to 18 years old. The child rider covers children until 25 years old. And let's put that back. So right now he is looking to get $570,000 in life insurance coverage for himself as well as his daughter. It's going to cost him $99.72 monthly. And what I'm going to do is come back and show you guys what it looks like to have an investment account with this, because after all, this is by term and invest the difference. He's going to rent this bucket of money until he owns his bucket of money. Thank you for watching.